Welcome to the deep dive. Today, we're diving into Honeywell International Inc.
Yeah.
to, help you figure out if it's a good fit for your portfolio.
Okay, sounds good.
Yeah. We've got a pretty good mix of sources for this one, from
Yeah.
like Wikipedia to SEC filings, even some financial analysis reports. Should give us a pretty solid overview.
Excellent. So just to start, Honeywell International Inc. is a multinational conglomerate headquartered in Charlotte, North Carolina. They actually operate in four main sectors: aerospace, building technologies, then you've got performance materials and technologies, and safety and productivity solutions.
Wow, that's quite a range.
It is. It is. They're actually a Fortune 500 company, came in at 115th this year, 2023.
Okay, so, with a company this big and working in so many different areas, I guess we should probably start by looking at how they're actually doing financially, right?
Right. We should look at their recent performance.
Yeah, exactly. What do those numbers tell us?
Well, if you take a look at their 2023 SEC filings, they reported a revenue of $36.66 billion. Operating income was $7.159 billion. And their net income came in at $5.672 billion.
Those are some big numbers. But I imagine that doesn't really tell the whole story.
No, it doesn't. We really need to, look beyond just 1 year. Look at historical trends, and then see how those figures stack up against their competitors in the industry to really get a sense of their overall financial health.
Gotcha. So, speaking of competition, how is Honeywell doing, market share-wise?
That's a good question. It can be tough to assess market share when you're dealing with a portfolio as diverse as Honeywell's.
Right.
But our sources give us some clues. For example, we know that their products and services are in over 10 million buildings worldwide.
Wow.
So that suggests a pretty substantial presence, at least in the building technology sector.
Makes sense.
We also see mention of their industrial automation technologies being used in a wide range of industries, everything from like chemicals and fuels to, food and beverages, pharmaceuticals, even things like mining and warehouse automation.
Huh. So they're really all over the place.
They are, but to really get a clear picture of their market share, are they dominating or are they struggling? We'd need to take a closer look at specific markets and how they're performing against key competitors.
Right. Okay, so they've clearly got a strong foothold in a lot of different industries. But what about the future? What about their innovation pipeline? What can we find out about their potential for growth?
Well, one thing that jumps out is their commitment to sustainable technology.
Oh, interesting.
Yeah, and that's something that's becoming increasingly important to investors, these ESG factors.
Absolutely.
For example, they're developing sustainable aviation technologies. They estimate that these technologies could help mitigate 270 million metric tons of CO2 emissions between, 2023 and 2030.
Wow, that's a pretty significant impact.
It is. And, this focus on sustainability could really position them well for the future.
Right. So that brings us to a pretty important point, I think. How does Honeywell actually stack up when it comes to those ESG factors?
Well, they certainly talk a good game, emphasizing their dedication to sustainability. But, it's essential to look beyond the PR, dig a little deeper, see if there are any controversies or criticisms.
Sure.
And actually, there is something we should mention. There have been some allegations about Honeywell supplying weapon components that were used in the Gaza conflict.
Why?
Yeah. So it really underscores the need to do your due diligence when evaluating a company's ESG practices, especially when they're operating in, potentially sensitive areas.
Definitely. Okay, so let's move on. Let's talk about valuation. What have we found out about how Honeywell is currently valued?
All right. Well, Zacks Investment Research gives them a value score of D.
I mean, D.
Yeah, which, isn't exactly stellar.
So what does that D actually mean for our listeners?
Well, it could be a sign that Honeywell might be overvalued compared to similar companies. But, valuation is complicated. You can't just rely on one single metric. You've got to take into account their financial performance, their growth prospects, the overall industry trends.
Sure.
All of that needs to be factored in.
Right. Okay, so one last thing before we wrap up this section. Honeywell has been pretty active in acquiring other companies, right?
Very active.
Can you tell us a bit more about these acquisitions and what they mean?
Sure. Well, these acquisitions seem to indicate a strategy of, expanding their footprint, particularly in high-growth markets. For example, back in 2015, they acquired a company called Elster
Okay.
for $5.1 billion. That move really strengthened their position in the gas, electricity, and water meter market,
Okay.
especially the smart meter segment, which is a big growth area.
Makes sense.
And then more recently, just this year, they acquired Carrier Global's security business
Oh, right.
for almost $5 billion.
Uh,
That deal significantly expanded their automation portfolio. So you can see they're not afraid to make big moves.
no, they're not. All right. So we're seeing a company actively positioning itself for future growth. But before we get too excited, let's take a look at the potential downsides as well.
Of course, every investment comes with risks.
Exactly. So what are some of the cons of owning Honeywell stock? What should potential investors be aware of?
Well, for starters, you know that D-value score from Zacks Investment Research.
Right.
That does raise some concerns about potential overvaluation.
Yeah, that's not ideal.
No, it's definitely something to consider. And then, of course, there are those allegations about the weapon components.
Mm.
Even though they emphasize sustainability, that situation really highlights the importance of scrutinizing their ESG practices.
Especially for investors who, prioritize ethical considerations.
Exactly.
Are there any other risks associated with Honeywell that we should mention?
Well, it's important to remember that some of their businesses, like aerospace, are cyclical. They're sensitive to economic ups and downs.
I see.
So that introduces a level of volatility that investors need to be comfortable with.
Okay, so considering all of this, should someone add Honeywell to their portfolio?
Well, that's a tough question.
Yeah.
It really depends on your individual investment goals and your risk tolerance. Honeywell has some, definite strengths, but there are also some risks.
Sure.
It's a bit of a mixed bag.
Okay. So for those listeners who are, interested in generating income from their investments, what about Honeywell's dividend policy?
They do pay dividends.
Okay, good.
But to get the specifics, like their history, the dates, the yields, you'd want to check a dedicated source like Stock Analysis.
Great.
It's really important for income-seeking investors to have that kind of information.
Definitely. And finally, let's touch on share buybacks. What insights do we have there?
Well, share buybacks can actually be a good sign.
How so?
It often means that the company believes its stock is undervalued, and they're willing to put their money where their mouth is, buy back their own shares, to increase the value for remaining shareholders.
Makes sense.
To really understand Honeywell's approach to buybacks, you'd want to look at their history, see how consistent they've been. And a platform like Y-Charts can be helpful for that. They have really detailed data on buyback history.
Okay, so we've covered a lot of ground here with Honeywell International Inc.
We have.
From their history and financial performance to their market position and innovation pipeline. We even touched on things like ESG factors, their valuation, acquisitions, dividend policy, and share buybacks.
It's been a thorough deep dive.
It has. But remember, this is just a starting point for you.
Absolutely.
Thorough research and due diligence are always essential.
Couldn't agree more.
Before making any investment decisions, we encourage you to, really dig into those resources we've mentioned and explore those aspects that are most important to you.
Because at the end of the day, it's your portfolio.
So we've really taken a good look at Honeywell. From its beginnings,
Yeah.
all the way to where they stand today, this multinational powerhouse. We dug into their financials, their different business areas, even those strategic acquisitions they've been making.
And we explored their, plans for the future, their innovation pipeline. We talked about the good and the bad of owning Honeywell stock. And then we even got into those more specific areas like ESG, their valuation, how they handle dividends and buybacks.
We really did cover a lot, didn't we?
We did. But it all comes back to this. Investing is about looking back, seeing where a company's been, understanding where they are right now, but also, and this is key, you got to assess their potential. Can they grow? Can they keep going?
Exactly. And that's what we've tried to give you today, the tools to figure that out for yourself. Yeah. For Honeywell, whether it fits your goals, your comfort level with risks.
It's your money. It's your portfolio. We're just here to offer some information, some insights.
So keep digging, keep researching, use what we talked about today, build on it. And for more deep dives, you know where to find us.
Subscribe to our YouTube channel. We're always adding new content, new companies to explore. And hey, if you've got a suggestion, a company you'd like us to cover, drop it in the comments.
We love hearing from you.
We do. So until next time, happy investing.